What is going on, everybody? Thanks for tuning back in. This is going to be a pretty interesting video. We're going to be going over different patterns in TradingView, different market patterns. So how you can kind of give yourself a better idea of where the markets may or may not be going. All the patterns that we're going to be looking at today are reversal patterns. So there are other ones as well, and I'll go over those in a different video. But we're going to go over things like the triple bottom, the head and shoulders, the top and the bottom, or some people call it the inverse head and shoulders. We'll go over some of that kind of stuff, right? And this isn't necessarily PT or PT feeder related, but it can give you an idea of how maybe you want to change your settings in your bot based on different, market patterns that you're seeing. And these are widely used across securities trading, commodities trading, and then also obviously crypto market trading. So these are really important. They've been around for a long time, and I figure I'll just kind of dig into them. So you can go to stockcharts.com, and they have a pretty good, library here of all of the different patterns or the main ones at the very least. And these are all very, very common. So we're going to be going over a few of these reversal patterns today. As you can see, there's the double top, double bottom, head and shoulders top, head and shoulders bottom. There's falling wedge, rising wedge, rounding bottom, the triple top reversal, the triple bottom reversal, which we're definitely going to go over this. This will be the first one. And then the bump and run reversal. So all of these, if you're familiar with trading, you've heard of probably all of these before. But we're going to go over the triple bottom first. So this one is pretty interesting because we may have just seen this in Bitcoin, and we're not kind of sure yet. And I'll explain why we're not fully sure yet. But this is something that I'm definitely eyeing on pretty significantly. So the triple bottom reversal is a bullish reversal pattern typically found on bar charts, line charts, and candlestick charts, okay? This is a major reversal pattern. So these patterns usually form over a 3 to 6 month time frame. So this is really important, and this is exactly what we've been seeing. If you've been following the Bitcoin charts, it's been about 3 to 6 months since our all-time highs, and probably about 3 months since our last bottom. So our initial bottom, I should say, not our last bottom. So if you look at this is the Bitcoin chart. This is the 4-hour chart. Usually I'll use the daily when I'm going over this kind of stuff, but just for the video purposes, it makes it a little more clear so we can see every specific bottom. And then when we get into the other, like the head and shoulders patterns here, you'll be able to kind of visualize the head and shoulders a little easier if we're on the 4-hour time frame. But as you can see, we had a very bullish market before all of this happened. And obviously we had our giant run up to almost 20,000. And then we had our bearish sentiment right before we hit our initial first bottom here, right? And so if we go back to the triple bottom reversal, it says you need to have these 6 different triggers, right? You need a prior trend. With any reversal pattern, there should be an existing trend to reverse. In the case of the triple bottom reversal, a clear downtrend should precede before the formation. What are we seeing? We're definitely seeing a severe downtrend where this initial bottom could be the start of our triple bottom, right? So I hope that makes sense. You need 3 lows. All 3 lows should be reasonably equal, well spaced, and mark significant turning points to the lows that we initially saw. So if you look at this, these bottoms here are pretty significant. And the way you can tell is you can see obviously the volume is very large in certain areas. You're getting really impulsive candles. And then you're also seeing large price action, which signifies a pretty, I don't know why we're freezing here. This has been happening, and I've cleaned this computer multiple times. This is frustrating me. I apologize for that. But as I was saying, you've seen some really impulsive candles like you're seeing here. And you're seeing some major price action from the bottom, right? And here you saw 93% reversal. Here you're seeing like 50 or 60%. And we're just now reaching that triple bottom here. And what we're kind of looking for is another situation like this, and I'll just keep going into what stockcharts.com has to say. So the volume, as the triple bottom reversal develops, overall volume levels usually decline. And we've definitely seen that. Everybody on YouTube, everybody who's on TradingView is talking about the volume. It's so low, and everybody thinks that that means we're going to go into oblivion down to 1,000 or whatever. This is actually a very good sign for this triple bottom pattern to be forming, because it's very common for the volume levels to decline. And then near the lows, the volume increases, right? We kind of see those pops, and I've talked about this in my videos in the past. We're near the bottom, you're seeing some increase in volume, and then you saw a huge increase in volume here. And then we're seeing sort of the same thing. We sort of saw it, what was this, yesterday maybe? Like a 5 or 6% 4-hour candle. You obviously saw massive volume down in here. So this is all sort of still playing out in my book. Now what we need is the resistance break. So as with many other reversal patterns, the triple bottom reversal is not complete until a resistance breakout. And what this basically means is we can scroll up here and we can see what we're talking about. So there's a clear resistance line in this chart, and this the prior highs, right? The relative highs that we've been seeing. We have the same thing in Bitcoin. And I would say our first resistance level is going to be right up here right around 10,000, which, or I guess it's 9,900, somewhere in that range. Once we see us break through this, the next thing that we're looking for is resistance turning into support. So we need to definitively break through this resistance line for this triple bottom to be intact and for this pattern to be valid. So it is possible that we end up, going in a different direction. This pattern, playing out the way it is doesn't necessarily mean it's gonna break through this $9,000, $10,000 mark. This is just something, that would make this pattern valid. So if that makes sense. And then we're also gonna have another resistance line drawn somewhere up in here, because previous price action dictates future price action in a lot of cases. And so this definitely was resistance in the past. It'll be resistance in the future again if I had to bet money on it, right? So that's at about 11,700, sorry. But yeah, so that's basically what we're looking at there. And then you have a price target. So the distance from the resistance breakout to the lows can be measured and added to the resistance break for a price target. The longer the pattern develops, the more significant is the ultimate breakout. The triple bottom reversals that are 6 or more months in duration represent major bottoms, and a price target is less likely to be effective. So that's probably something we're looking at. I don't tend to try and guess the top. I like to look at these prior resistance levels, and that's kind of where I shoot for my targets. If we do break through this 9,900 mark, I will definitely be looking at this more seriously, and then kind of looking for us to test resistance levels at the 11,700 mark, somewhere in there, right? So that's this first one. I hope that makes sense. We're going to get into the head and shoulders. This is a little more tricky, a little more complicated, but it'll make sense. Head and shoulders reversal patterns form after an uptrend, and its completion marks a trend reversal. So this is actually really important. All of these are reversal trends, but the head and shoulders is something that a lot of traders use very frequently. And so what you're looking for here is very similar things. You're looking for about 5 or 6, let me see what they say, 7, 8, 9. Okay, so the head and shoulders, they have a lot more kind of indicators to look at, but relatively it's the same thing. You need a prior trend. When you're looking at the regular standard head and shoulders, you're looking for a prior uptrend, right? And that's kind of what we saw up here, and even in this direction here. So I mean, you could probably pick out a head and shoulders pattern somewhere in here. You actually can, right in this area. You can get a pretty significant head and shoulders there. Another one of the indicators is obviously this is the left shoulder. This is going to be the head up here. And then you're going to see another right shoulder. And one of the indicators for this is you want to make sure that the left and right shoulder are relatively the same size. And then you have your neckline, which should be, close to horizontal, it doesn't necessarily have to be. The charts aren't ever going to be perfect. You're not going to see a perfect head and shoulders top or bottom if you're using the inverse head and shoulders. But as you can see here, their example, they have the left shoulder, the head, and the right shoulder. And obviously the right shoulder is quite a bit larger than the left shoulder, but it's still okay. And then this is your neckline. And so, as I said, you need a prior trend. When you're using the regular head and shoulders, you're going to look for a prior uptrend. And then the left shoulder, while on an uptrend, the left shoulder forms a peak and marks the high point of the current trend. After making this peak, a decline ensues to complete the formation of the shoulder number one, which is the left side. Let's see. So then you have your head, which is the same idea. The trend continues up to the top and goes down back to the neckline, and it reverses at this neckline, which is a support line in this kind of pattern. And then it forms the right shoulder, and it ultimately breaks through this support line pretty much into oblivion. And the way I like to use this is the distance from the neckline to the top of the head here is a pretty good indicator of how far this thing might fall off. And so you can take that line and you can get an idea, and it's actually pretty darn close. Obviously you have these candle wicks that dipped way down, but if you bring this, if we just draw another trend line and bring this right in here, this is the length from our neckline to our head. And generally speaking, when you're using these head and shoulders patterns, you can just drag that down to the neck and you can kind of get an idea of how far this thing may fall. And as you can see, it was pretty darn close. The same sort of thing happened here. We have another head and shoulders reversal pattern going here. We had a clear uptrend. We made this left shoulder. We bounced off this support. We jumped back up to make the head. We came back down, hit this support line, jumped back up, and then look what happened. We sliced through this like butter. We obviously had a little bit of a support down here, but it ultimately broke down, and we definitely saw some significant price action falling down in here. We definitely had some sideways movement, and you could even make a case that this was another head and shoulders pattern in here. Although that is a little bit more far-fetched in my opinion, because you had this massive red candle. But anyway, so that's the normal head and shoulders. We don't really need to get too much into it. Volume, I guess, is pretty important. As the head and shoulders pattern unfolds, volume plays an important role in confirmation. Volume can be measured as an indicator or simply by analyzing volume levels. Ideally, but not always, volume during an advance of the left shoulder should be higher than during the advance of the head. So this decrease in volume and the new high of the head together serve as a warning sign. So imagine if you're sitting in this point right in here, this is our head, this is our left shoulder, and this is our right shoulder. So imagine you're sitting right in here. Obviously, the volume coming up to form this right shoulder or this left shoulder is higher than the volume coming up on this head. And not in all cases, but you can see some of that pattern forming. Like right in here, you see a ton of this green volume. It's quite a bit larger. And it's not always the case, but that if this volume in here is lower than the volume here, that's a good indicator that, okay, this head and shoulders pattern may be playing out right now. And so we can look at it in here. We had a huge volume spike right in here to start forming our left shoulder. And then we did have some nice volume here, but it was smaller, as you can see on the volume chart down below. So that's a good indicator that says, okay, our price action increased dramatically, but our volume was actually lower. So that is a warning sign in this head and shoulders pattern. The neckline break, this is important. But basically the rest is kind of, I already explained it. And the same idea is for the inverse head and shoulders, but this is a reversal, like more of a bullish reversal. So if you see these inverse, this is exactly the same thing, but it's upside down. It's flipped upside down. So if you see this left shoulder, then you see the head, then you see the right shoulder. Same idea. You can go back to the charts and you can look at it here. You have your left shoulder, your head, and your right shoulder. And you can get the same idea, neckline to the top of the head, and see exactly where it lines up, right at the top of that peak. So that'll be it for this video. If you want to see more of this kind of stuff, subscribe to the channel. I really appreciate it. Also join our Discord. We're always talking about this kind of stuff, and you guys can give me thoughts and update whatever you guys want me to make videos on next. So I'm all ears for that. So I will catch you all in the Discord, and subscribe to the channel. See ya.